to next week. What we get, Microsoft, right? Amazon. I mean, the list goes on.
It's kind of a weird situation because we go into this quarter's earnings with everyone pinning their hopes on big tech. You know, we did this fantastic Tech Watch column last week about how if you look at the 5 mega caps, their average earnings growth is projected to be like 34% because we started the year with the pain with tens of thousands of jobs being cut and cost discipline, and the results are now going to show in those names you see on the screen, many of them, maybe apart from Intel, where they're just profit machines at a time where the S&P 500 as a whole is projecting flat earnings growth. But the thing is, Guy, like, what if we're wrong and tech doesn't do as well on a bottom line perspective as we think they will?
This is the story. Look, if the famous 5 do not deliver next week, all hell is going to break loose, I think. But this is the moment for the market. This is what has supported the market. If these guys aren't delivering, then that is a major piece of the foundation that is under pressure.
Yeah, and there's also a lot of contradictory data and reporting out there, right? So if we take Apple as a case study, from a top-line perspective, Apple's revenue is forecast to drop 1% year on year in the quarter. That would be the 4th straight quarter of sales declines, which Apple hasn't seen for 2 decades. And we had that third-party data saying that sales of the iPhone 15 in China are not looking good relative to the same period a year ago when they released iPhone 14. So even if they do, you know, the traditional Apple thing of just being brilliant at eking out profit, psychologically, we're worried about tech because we learned with Tesla this week, right? No matter how charismatic your leader is or how brilliant your product, there is no sort of blanket immunity to the world around you.
But what I find so interesting when we kind of lump all these companies together is that they are very different stories, right? Like Amazon has the retail component, and I get that, but it's also cloud. It's the same with Microsoft, same with Google. That's not the story for Apple and Intel in the same way. Like, we're going to lump them in, which I appreciate, but there's the idiosyncratic issues here.
Yeah, and you know, go back a quarter, you know, one quarter doesn't make a company's entire year, but the cloud story is really interesting, right? Usually when macro conditions are poor, you will see companies pull back on their cloud spend. The wild card is artificial intelligence and the sort of just clamor to secure high-level compute to power and train large language models. That's driven really big demand for the GPUs. We know that about NVIDIA, although that story started to tail off as well. So we might be wrong.
Ed, what about advertising? I think this is going to be fascinating. What is happening with the consumer, the labor markets? It all comes together in so many ways within the advertising space.
Yeah, and I think, you know, we look first of all to Alphabet, the parent company of Google, and then we go back to Meta probably and ask, you know, partly because they follow sequentially in the calendar. And often when Alphabet reports earnings, if it's good, you will see optimism going into Meta earnings because despite the story of the metaverse, their bread and butter is advertising. I think, you know, there is some optimism. The US economy in particular continues to defy the Federal Reserve's wishes, at least with strong data, particularly consumer-facing. And so there is some read-through on the sell side, at least, that we might see some strength toward the end of the year in ads.